What's up, everybody? We are live. We are live. Hopefully, everybody's on time. Actually, I'm a little early, so I'm gonna give my boy, give him like 2 minutes to join. Usually, my one of my co-hosts joins me, so see if he's going to join today. If not, we're gonna get started. Today is gonna be about the dividend course. If you're trying to learn how to make some passive income via dividends, today is the day. We're gonna do this thing. It's all about making this money. But I got like eight, maybe like 9 to 10 screens open. So at any point, like anything is too small, just let me know. I can make it a little bit bigger. I can increase the size. If you can't see it, that's like 150%. So that's good. So let's see if Kai's is going to join. If not, it's just 7 on the dot. We'll get started here in a little bit. But if anybody's online right now, just go ahead and type in the comments. Type where you from. Maybe put your name in there. I'm calling from well, not calling, but I'm going live from Dallas, Texas. So for those who don't know, I've been in Dallas for 19, 20 years. So I just want to see where everybody else is from, see what everybody else got going on. And we'll get started in about 3 minutes. Maybe ask a few questions, get some questions knocked out before people start joining. And if anybody want to join live, let me know, and I might just send you the link, and you can go ahead and join. We can have a quick Q&A afterwards. All right, Kai, so you got about 2 minutes. He's usually a little late. If not, we'll go with finviz.com. If you're not familiar with finviz.com, it's another one of the websites that I go to every single day. And why do I go to finviz every single day? Because there's some good information in there. Like, so usually Kaiser does his part, but we'll just get started. If he comes in, he comes in. So one of the things that I like to do is go to finviz.com, and this is all going to relate to the dividend course. But one of the first things you want to do is go in here and look at these groups. They got so many ads now. You want to look at the different sectors. There's 11 sectors in the market. And when you start looking at these sectors, you can kind of see what's trending up, what's trending down, maybe some sectors that you should invest in. So we always look at the top three and the bottom three. You can look at the 1 day performance, but we like to look at the 1 week, 1 month, even 1 year. Um, if you look at the last week, you see energy's been kind of rising in real estate a little bit in healthcare. Those are the top three, and the bottom three got basic materials, communication services, and computer defensive. Energy's been rising. If you look at the price of crude oil, it's probably what it's like 51, $52 per barrel. I think earlier this year it was at like 40, 45. So that's steadily been increasing. A lot more people are getting out and about, traveling. So it's reasonable why energy has recovered a little bit. But if you look at the 1 month, energy still recovered. It can only go so low before it bounces back. And finance and basic materials, the top three, and the bottom three is still real estate. Real estate hasn't bounced back yet, but that's pretty cool. You pay attention because we're actually going to talk about some real estate dividends, and communication services and consumer defensive is at the bottom. But if you look at the 1 year, which is very important, energy is still at the bottom. It's down like 28% because the whole, sorry, that's my dog, because the whole world's been shut down, energy and real estate. And of course, technology has always been at the top. So we just kind of glance at that. The market is closed tomorrow, but usually I kind of look at these futures to see if the market's going to be up or down. So this usually is updated on a Sunday about 8 p.m. Central Time, I think. Or what is that, like 9 p.m. Eastern? And I kind of see if the market's going to be up or down. That's my daughter. That's fine. If you pass by, please turn the AC down a little bit. It's a little hot in here. But anyway, this course is all about dividends. What's up, Tamika from Ohio? Cool. Welcome, welcome, welcome. So let's just go ahead and jump right in this. It's all about dividends today. So why are dividends so important? Well, there's only a few ways. Well, there's a lot of ways to invest, but some people choose the safe approach. That's that long-term investing where they just buy a stock and just hold it forever and just keep buying the same stock. And if you take that approach, you might want to start looking into dividends because it's some easy passive income. So let me see if this is going to work. Yeah, it is working. Okay, cool. So today we're going to discuss not only what is a dividend. Okay, yeah, I see her. What is a dividend, but how do you earn passive dividend income? Okay, well, open the door so she can use the bathroom. Sorry, my daughter and her dog. How to earn passive dividend income. and how do you research these dividends. And I'm going to recommend some dividend stocks, ETFs, REITs. Then I'm going to give you a dividend strategy. So let's get started. So the first thing is, what is a dividend? A dividend, you see their definition. And if anybody want this PowerPoint, I'll send it to you because most of these have clickable links. So you just click. I always use Investopedia to do some research. It's free and it's pretty accurate, very accurate. Oops, there's my daughter game. So basically, it's a dividend. It's a distribution of profits by a corporation to its shareholders. So pretty much, they're going to share their profits with you, which is one of the coolest things in the world to me, because when you invest in a company, you become part owner. I don't think some people who are new to investing realize that. You know, if you invest in AT&T, you're part owner. It might be 0.000000001%, but you're still part owner. And so if that company pays dividends, basically if they record some record profits or just a profit at all, and they decide to share it with the corporation and their shareholders, you get paid too. So that's pretty cool. So you ask yourself, like, why do companies pay dividends? Well, it's blurry. It is blurry. Why is it blurry? Okay, let me take myself out. Is it still blurry? Because it's pretty clear on my end. Just let me know if it's still blurry. And so what can I do to make it unblurry? Let me know if that's better. If not, I got the PDF version. Maybe I need to open it up in PowerPoint. Let me know, Tamika, because yeah, I don't want everybody. I want everybody to see exactly what I'm looking at. If you can't, then I'll open up this version. So let me know if it's still blurry. I'll switch versions. Okay. So dividends. Why do companies pay dividends? Well, basically, it's a reward for trusting in their company. So basically, they're saying, hey, you know, you invest in our company and you don't sell your shares or you don't take off your investment. When we make a profit, we'll share it with you. Not only that, it reflects positively on a company. Any company that pays dividend, investors look at them a little bit better than these other companies. And at the bottom, you see it attracts more investors. You know, some people or some investors look specifically for companies that pay dividends. So you ask yourself, why do I invest in dividends? Really, it's just a source of income, passive income, but most people use it for retirement. And you'll see in a second how Warren Buffett and these other great investors use dividends to pretty much maintain a status as the wealthiest people in the world, because in most cases, their capital never go down, but they keep receiving these dividends over and over and over again. But before we get into the nit and grits of things, some things you got to consider. So although cash dividends are the most common, you know, dividends can also be paid or issued as shares of stock. You could get more equity in the company instead of just receiving a cash payment. And most importantly, not all companies pay dividends. In a second, we'll look and see how can you identify if a particular stock or company pays dividends. And the last one, dividends can and do get cut. So just because a company is paying a dividend today, don't mean they're going to be paying it tomorrow. Because of this pandemic, a lot of companies that once paid dividends are no longer paying dividends. Maybe because, you know, business has declined and they lost some money. So, all right, so you know what a dividend is. You know why companies pay dividends. How do you earn passive dividend income? Well, I would tell you this. They have this thing called DRIP. And I don't think Robinhood has it. They might be adding it. I'm not too familiar with like Stash and those other apps, but most of them don't have drip. E-Trade has it. I'm pretty sure like TD Ameritrade and those other brokerage firms have it. But if whatever app or brokerage firm you using don't have it, I would probably switch to one that has, because you definitely want to turn this on. It's a simple switch or a button that you just click, and once it's on forever. And why is that? Well, I just told you, because if you receive dividends from a company, you have two choices. One, you could receive the cash or check. So let's say you got $1,000 coming to you. You could have that $1,000 right into your account, and you could live off of that. You could spend it. You could buy whatever you want. You could go to the club. You could buy a new car. You could buy some new shoes, whatever you want. Or, which is if you don't need the money, it's recommended that you turn on drip. And what drip does is say, hey man, don't send me that $1,000 check. Instead of sending me that check, reinvest that money and buy me more shares or equity into your company. Therefore, my dividends just keep growing and growing and growing. I get more equity in a company. And then once that compound interest kick in about 10, 15 years, oh my God, we are on to the money. And here's just a quick illustration right here about investing if you don't have drip turn on versus not turning it on. And you could click on this calculator too, and it'll show you. And you can come in here and play with the results all you want. It's pretty cool, but it's pretty simple. If you don't have it on, what is this? Investing like what is this? 10 grand and holding it for what is this? 25 years. You get about 58 grand, but if you reinvest it, you get about 115 grand. And you can go in there and do this with any company that pays dividend. I was just doing this with AT&T a second ago, but if anybody want to just run some of these simulations, we can in a second, but we'll just keep moving on to the most important thing because this is not a very long course, to be honest with you. Now, here's the nit and gritty. Like, how do you research dividends? How do I know if a company pays dividends or not? So it's a few things you need to know. You need to know about this forward dividend and yield, this ex-dividend date, payment date. So let's just let's look at AT&T. I always use AT&T for some reason. Let me know if you can see that. So to tell if a company pays dividends or not, just go down here and scroll right here. You see this forward dividend and forward yield? If there's no information right there, they do not pay it. So let's just look at Tesla. Everybody loves Tesla, but Tesla is a growth stock and do not pay dividends yet. How do you know? Bam, there you go, NA. All right. So let's go back. If there's NA there or there's no information there, they don't pay it. So let's go look at AT&T. So first, this is dividend for dividend and yield. This yield is basically saying what percentage of their shares do they pay in dividends. So they pay what, 7.13%. You don't have to do the math, but if you want to do the math, you can do the math. It's pretty simple. So, sorry. So they pay 7.13%, but you see this $2.08. This is basically saying for every share of AT&T you own or any stock, this number right here, that's how much they're going to pay you per share, right? And so if you divide $2.08 divided by their share price, which is, move out the way, calculator. Let me see if my math is right. Divided by 29.17 times 100, you get 7.13%. And that's what the numbers we were just looking at. All right. So ask yourself, AT&T is only $29.17 a share. Let's just say you had that 10 grand we just used an example. Divided by 29.17, you're going to have 300, let's say 43 shares. All right. Since they pay you $2.08 per share, they are going to pay you $713 per year. But they pay these dividends quarterly. So you divide that by 4, and every 3 months, you're going to get $178. You can scale that up as high as you want to. And now you can see how the rich get rich and stay rich. Because if I had $1 million, oh, I almost put, right? So now I got 34,000. So 34,281 times that same $2.08. Bam, you mean I'm gonna get $71,000 per year if I had $1 million just for investing in AT&T and not selling my stock? Yes, that is correct. Now you see how people live off of dividends. That's why you got to get to that meal. All right. And you could do this. It doesn't matter if you start off with $100, $200 in dividends. It adds up, compound interest kick in. That's why you go use that calculator to see how long it's going to take you to get there. All right. So now we need to look at some more information. So people are just going to say, okay, I'm just going to buy AT&T. How do I know when I'm going to get this dividend? You have this ex-dividend date. This is basically saying if you do not own AT&T by January the 8th, the next dividend payment that they pay, you're not going to get it. That means you need to own the stock by the 8th. It needs to be settled. So let me see. So if you buy it, I don't know, what day was the 8th on? The 8th was on a Friday. Cool. Damn, I should have knew that. So if you buy this on the 8th, you're not going to get it because it takes what? T plus 2 days to settle. So basically, you need to buy this on the 6th in order for your funds to settle by the 8th in order for you to get this next dividend check. All right, that's how that works. So You know, though, that's the most important information you need to know. Now, there's some other websites you could go to and do some research. You could just go to Yahoo Finance, or you could go to NASDAQ. And NASDAQ is pretty cool. If it pulls up, I'm going to show you some more information, some more research that you could do. It's pretty simple. Oh, my fault. My bad, Kaji. How long you been in there, bro?
I've been watching, man. I've been listening to you. Can you hear me?
Yeah, I hear you. I just looked down. My bad.
Yeah,
All right.
I've been watching. When I logged in, it says you are. I'm at the backstage. Moderator will allow you in. So I've just been watching. Yeah.
Okay. Well, you're here now. Okay. I'm just waiting on this website to open and look like it's doing its thing. So let me try this a different way. Let me just go here. Let's just go to NASDAQ. And sometimes you could just Google it. Let's do dividend history. If y'all can't see that, let me know if it's too small. Because let me just blow this up. All right. So let's look at AT&T again. Or yeah, because I know they pay dividends. And let's look at their history. This is actually pretty cool. Where are you at? That is not it. That is not it. That is not. Here we go. Dividend history. All right. So there you see the ex-dividend date again. All right. So you need to own the stock by this date in order to receive the dividend. They're going to pay it out in cash. And here's the amount. So I just told you they pay it out quarterly. So if you multiply 52 cents by 4, you get to $2.08. All right.
Yeah.
Here's the declaration date. So on December 11th, they declared that they're going to pay a dividend. Here's the record date. So what's the difference between the ex-dividend date and the record date? Basically, on this date, if you don't own it, they cut you off. You know, even if you buy on the 8th, it's too late. And its record date is basically when they look in their record books and say, oh, let me see everybody who's on this stock by the 8th. And those are the people who are eligible for the dividend. That's all that means. And then, can I scroll over? Is this going to let me scroll over? Well, you can see the payment date. I can't scroll all the way over for some reason, probably because I blew it up too much. But the payment date is when you're going to receive it. So, yeah, if you owned it by January, they're going to make a dividend payment on February the 1st. Then you can go down here and look at the entire history of all the dividend payments that they made. And that's actually pretty cool, right? So you could use that site, or what's the other one I got on here? Dividend.com. Let's see if this one opens. Oh, yeah, this one won't work. Oh, shit, it did open. I just had to be patient. All right. So the same thing with dividend. Let's go look at AT&T again. Don't worry, we're gonna look at some other stocks besides AT&T. Probably like, why you keep showing AT&T? So the same thing. You could go all the way to the bottom. Same information. When they're gonna pay it, February 1st. The declaration date. That's when they say, hey, we're gonna pay another dividend. Ex-dividend date. That's the date that you need to own the stocks. Oh, that is kind of blurry. I can't even see it. All right. That is very blurry. All right. All right. That should be bigger now. Okay. So there we go. You see the pay date? That's when they're going to pay it, February the 1st. Declaration date, that's when they declare the new dividend. The ex-dividend date, remember you need to own it by this date to receive it. There's a payment amount again, but here, look, what's the frequency? This is going to be important in a second. They pay it out quarterly. There you go right there. They pay it out quarterly. And you can scroll back to the top and look at some information. Basically, all the same information you see in Yahoo Finance. How many years have AT&T paid their dividends and increased it? Look at that number, 37 years. So you might want to do some research because you come in here and you see a company that's been paying it a year, 2 years. You don't know if they're going to continue paying it. But if you see a company paying it for 37 years, that's a good track record of paying dividends, and makes me a little bit more confident that they're going to continue paying their dividends. Because remember, at the beginning of the course, we say they can stop paying dividends whenever the company experiences hardship. So I have a question. Does it update after each pay date? Yes, it does. Payout date. Yes, it does. This was continuously updating. Yes. So you could go to either one of these and just check it. All right. Um, and these are all the same. I don't know if anybody got any questions about this, but all right. So now you know what it is. You know how to earn it. You know why you need to turn on drip. You know how to research dividends. So you're probably gonna ask yourself, like, man, now I need a strategy. Like, and this is the last part of the course. Like, how do I decide which companies I should invest in if I want to start earning some dividends? Well, luckily we got two. We got these things called the dividend aristocrats and the dividend kings. The dividend aristocrats have been paying or increasing their dividends for the last 25 years. Like I just told you, that is a very good track record of paying dividends. I feel pretty confident if you've been paying it for 25 consecutive years or more. But the dividend kings have been paying theirs for 50 years plus. I think I trust both of them, but that 50 years plus sound a little bit better than that 25.
Yeah.
So luckily I have these pulled up for us, Kaiser. So let's look at these. I thought I had it pulled up. Nope, that's not the one. Bam, right there. The dividend aristocrats. You could just go Google this. And there you go. And these companies are very familiar. You should know Dover, Procter and Gamble. If you don't know Procter and Gamble, we all use Procter and Gamble and 3M. Coca-Cola, J&J, Lowe's, Colgate, Target. Look at that, Target for 52 years. People probably didn't know Target been paying dividends for 52 years. PepsiCo, Abbey, look at that. Walmart, 47 years. So you could just go down this list. How many is on this list? Like 66 for 25 years plus. Even ExxonMobil, as bad as ExxonMobil is doing right now, they are still paying their dividends. Clorox, that's very good. And AT&T, all right, for 50 plus 25 or more years. Sorry about that, 25. But if you want to go look at the dividend kings to 50 years or plus, and let me know if this is too small. If you don't tell me, I wouldn't know. Now look at the 29, 66 years. Whatever this, Amber States Water, I don't even know what company that is. There's Dover again, Procter and Gamble, 3M, J&J. Most of these are household names. J&J, Coca-Cola, Lowe's, Colgate, Hormel Foods, Target. These are household names that you all know. The Federal Reality. Look at that. Altria. Smoke cigarettes. Anybody smoke cigarettes? You probably want to invest in this company because you might as well pay yourself back. All right. So there's two to start off with. And what else do I have on here? All right, let's look at some REITs. Right. So we haven't talked about REITs, and this is part of the strategy. So REITs, so we discussed this earlier. Majority, and let me just go do this again. Majority of these companies pay dividends quarterly, but there are some stocks that pay them monthly. And here is one, O Realty. Now this is a real estate company, so you might want to be careful. But actually, here, let's just do this. Monthly REITs. There you go. Just type in monthly REITs, and you can find some REITs. If you don't know what a REIT is, it's basically buying real estate by investing. So if you didn't know, you can own malls and real estates. You could just invest in those as well. You don't have to actually go out there and spend your hard-earned money and buy a rental property and pay it off in 10, 15 years. You could just come and invest in a REIT. Just so I would look up some that pay monthly. And here's some. I don't think Apple Hospitality still pay their dividend. I thought they suspended it. But you just go through this list and find some that you personally researched and you believe in, and find some that are monthly. And then you stagger them. So then you have a choice, right? So if you want to receive a monthly dividend every month, you could go invest in these quarterly dividends. So let's say AT&T pays on January. Well, you know they're going to pay it every month, every 3 months. So the next one you're going to get is what, April? So then go find one that pays in February. You might go get Dover that pays in February. Then go find you one that pays in March. And therefore, you got 3 dividends, and you're going to receive a dividend every month. Or you could just invest in some of these REITs that pay monthly, and you receive a monthly, or you could do a combination or a mixture of them both. And every single month you would get a dividend. And that's it. That's pretty simple. That's how you invest in dividends. That's how you research them. That's how you earn this easy money. So let's see. Throw out some questions. All right, Tamika, does stock price going up and down affect dividends at all? That is a very good question. So the answer is yes and no. Does it affect if you're going to receive the dividend, no. If they pay dividends, you still receive the dividend. But let me bring AT&T back up. Now, actually, let's look at something different because you probably see that great dividend. Like, do all stocks pay great dividend? Let's look at Altria. Right. So the same thing, right? So for every share you own, it's $3.44. Remember, AT&T was $2.08, but AT&T shares was $29.17, and Altria is $41. So there's no correlation, just something to think about. So you got to ask yourself, this number right here, it doesn't change unless they increase their dividends. But this yield will change because the stock is $41.20 a share right now. So if the stock went down, you still take this $3.44. Let's say it dropped to, let's say, $35, right? All that means is you get a higher yield. So now instead of them paying 8.35%, the yield is 9.82%. That's all. That's the only thing. So honestly, if you buy it on a dip, you kind of buying yourself more money, to be honest with you. If you buy it on the dip, you're paying yourself more money because if you look at this year-to-date chart, it's at 41 now, but at one point it was, well, let's see. Because Altria doesn't move that much, to be honest with you. All right, let's look. Yeah, the 1 yard chart. It's at $50. So when it was at 50, the yield 6.88. So now that it's all the way down to $41, it's at 8.34. Yep, 8.35 if I round up. So yeah, the stock goes up and down. The only thing that changes is the yield. But most importantly, I don't really worry about the yield. I worry about this amount right here. I worry about the dollar amount and how consecutively they have been paying their dividend. If you go look, let's just look at the Apple Realty. Real. Oh man, I forgot what they symbol is. I think it's APLE, right? At one point, this is a very good dividend paying stock, right? Because this is like I think this is in the hotel business, but man, when the pandemic hit, bam, gone. And actually, let's just see. Let's go back to dividend.com and look. And let's see if we can find the history and see when they fell off. And now you'll see why it's important to kind of do your research. If you Apple Hospitality, so consecutive for 0 years. Let's see. So look, they were paying it. Let's see, 10, 15, 11, 18, 11, 3, 16. When did they stop paying it? Look like they stopped paying it. No, she needs to get up out of here. So you see it's a monthly. I just can't, I got to do some more research to see exactly when they stopped paying it. But you see NA at the top. So they just stopped paying it, but I want to know exactly when they stopped paying it. But it doesn't matter. They don't pay it anymore. So before you just jump in the stock, go do your research. Make sure they're still paying a dividend. And know that this is important. Sometimes right before companies finna pay their dividends, the stock price might drop to compensate for this dividend that they're gonna pay. So, that's also another thing to consider because let's look at AT&T again. Sorry, actually gonna look at two. So AT&T is not a growth stock; it's a very slow stock. So it's not gonna go up. You're not gonna double your money in a year or so. So if you go look at the last year, it was at 37. It's at 29 now. I don't know if that's because of the pandemic or not, but you might have lost money because the stock price went down. But as long as they pay those dividends, eventually you'll recover. If you go look at some other companies like Walmart, their dividend's not going to be as high as AT&T. They're $144 a share, and they paying $2.16 per share. That's what pretty much the same price as AT&T, which you could get for like $30. But with Walmart, you pay 144. But if you look at their 1 year chart, they actually went up. So not only does your equity, is your return on investment greater from a stock point of view, you're still receiving dividends at the same time. And you could do this with Apple as well. They pay a dividend probably pretty low. So what is their stock? 127 a share, and they only pay 82 cents. per share. So you're not going to make too much money from dividends, but you should make it on the flip side because they have growth in their company. So you got to kind of weigh the two, right? Just got to weigh it out. Me personally, I'm focusing on aggressive growth stocks now, but when I come back, I'm coming back to some straight dividends. More than likely, well, I already got Apple, but Apple, AT&T, Altria. I was big on ExxonMobil, but I'm probably not going back to that. And I found one or two more, maybe like Microsoft. And when some of these REITs come back, Realty and Apple Hospitality, once they start paying their dividends again, I would definitely be back in those. And that is it. Guys, what's going on, man? You got any questions, anything you want to talk about? Or if anybody else got any questions, let's go ahead and answer those and help you make some money, because it's been a lot of news here lately. And I want people to make this money real quick.
Yeah, I think thanks so much for all the information out there. Just unfortunately, I didn't come in, but at least I have the slides and stuff like that. I want to read. Yeah, great piece of slide. I say that it's good to have a mixture of or to have a portfolio of companies that would also give you something back alongside as some of them growing up. Like there's one of them that I kind of, even though it's not a huge amount,
Right.
I now and then I get dividend from them. One is FREL. You can pull it up.
Yeah, I'll bring it up.
Yeah.
FREL. I actually never heard of that company. Or have I? Let's see what you. So if anybody, well, yes, it's like 4 or 5 people on here today. So let's see if anybody could break this down for us. Anybody want to come online and break this down for us? Let's see if you learned something today. All right. Well, actually, Kaiser, if you don't want to, you can break it down. This is your stock. You own it. So
Yeah. So
it's an ETF. Okay. Oh.
Basically an ETF. And they're into the real estate ETF, basically the real estate ETF. Yeah, and for some time now, it has been a bit, it has been wobbling here and there, but I'm hoping that it comes back. It was doing like quite well some months back before there was a dip, and it's picking up again. But yeah, I'm that type that I have made my mind up that this time I'm not just going to be selling stock just like that. Like, you know,
that's trading. Yeah, you just keep selling it. Yeah, instead of investing.
Yeah. But
this one is different, because if they go here, they're not going to see that yield in the dollar amount. They're only going to see this, because this, for anybody, this is not a stock. This is a ETF, which is a collection of stocks. So when you come here, you're not going to see like we just seen with let's just say like Walmart. So Walmart, you can quickly go.
Walmart is also great. I have Walmart too, so maybe we can use Walmart too as an example.
Yeah, but if you go to Yahoo Finance on Walmart or any other stock, regular stock, you can see this for dividend and yield and the ex-dividend date, because it's a stock. But as an ETF, it's not going to have it. It's just going to have the yield. Yeah. So if you want to know you could do the math yourself, whatever 3.77 is of 25, or you could go to those sites I just showed you, NASDAQ.com, and look at the dividend history, or dividend.com, and see exactly what they pay. But it's also a expense ratio for those who don't know about ETFs that you have to pay.
There's an expense ratio also there. So if you want to buy that, you should also look at the expense ratio too, basically. Yeah. So I have that. I also have Walmart, just as you mentioned earlier on too. And the growth has been quite a slow growth, but you can pull up Walmart. I saw you put it up earlier on. That is also a very good one that I personally have also in my portfolio. And within this season, it has really been all the way from last year, November, as we enter into the festive season, things has been going really up. And if you use E-Trade, you see if they are paying dividends in a particular mark. I don't know whether you've realized that it shows a green flag
Yeah.
There's a green flag that you see beside the stock, and you click on that. It even gets you to know what you be paid and all that. So
I think Webull does this as well. That's why I'm bringing it up
oh,
real quick.
I've
I don't
not
know if it's a
noticed that.
flag, but I know, I'm sorry to cut you off, but I know there's somewhere in here. I'll look, but there's somewhere in here where they show you all these stocks that's finna pay dividends. So I'll let you
Oh,
talk while I search.
yeah. So E-Trade gives you see um, the stock and the flag close to it. That's what I've noticed. Can you see me? Can you still hear me?
Yeah,
Okay. Yeah. I'm just trying to pull this thing up.
bam, I found it.
Yeah.
So tell me I need to blow this up. So this is why I use Webull every day, right? Another great thing. So just come on here. So in the same section where you're looking at IPOs, click on the calendar, then click on
Mhm.
dividends. And
Dividend.
look, these are all the dividends with that's coming up next week that you need to own them by these dates. Oh, look, we just talked about Lowe's. So if you want to get in on Lowe's, actually it's too late. Yep, because you need to have bought this. The market's closed tomorrow, so yeah, you should have bought this like on Thursday. Caterpillar, I think that was on the list. What else? CVS, bam, there we go again. Coca-Cola. So now you see why I recommend Webull and why I use Webull. And since we're talking, same thing with earnings. You know, you can bring up the earnings calendar, or just go to Webull. So it's gonna be a big week, right? Netflix, Bank of America, Golden Sox. Those are some of the big earnings.
Yeah.
That's why I
So
love Webull, man.
Weibo is also very good. I think some most of the just as you said last time, most of the apps don't really give you all the breakdowns a lot. So I always encourage people, hey, if you're using the other ones that maybe Cash App. I don't know whether Cash App displays or because I know people try to buy stocks using the Cash App and the app and all that. You'll be able to buy the stocks and all that. But if you want a breakdown, you'll not be able to see it in most of the apps. So the kind of apps that you also use also it's very very important. So you may probably have Robinhood, which is good for some people. They like it. There's nothing wrong with that. But you if you want to go to the next level in terms of your analysis and how
Yep.
things really go, yeah, you may have to get a different account also that you use for uh, your stocks that you can really see all the breakdowns that just as he's giving us and all that. And I think you'll be good with that. For most of the things, you should just be ready to sit down to read
Yeah.
and see how it works. If not, uh, if you're waiting for somebody to always do all the analysis for you, you may also have to take it upon yourself to sit down to read some of the few things, then you understand some. Yes, and compare them. But E-Trade is a very good one. Weibo is also a very good one. The other ones that some I don't know about, but some they don't really give you those analysis. Yeah.
Yeah, I got a lot of friends. I mean, you see in the Facebook group, you know, they always asking like, "Hey, should I use Robinhood?" That's what I got, or I got Stash, or I think it's called Acorn or something. I'm like, you know what? To get started, if it got you interested in investing, hey, kudos, great. It allows you to buy fractional shares. So like if a stock costs $20, you only got five, you could buy it. But with a real brokerage account, if you don't have the full, amount to buy it, you can't buy a fractional share. But not only that, Robinhood has crashed like 5 or 6 times. I'm pretty sure they'll fix those issues. But when they crash, when the market crashed, and if I had Robinhood, I couldn't log in and sell, and when people lost that much money, I would have been pissed. I would have never used Robinhood again. So that's why I don't use Robinhood, and I don't think they have drip. So they might have it now, but if you
Yeah,
can't turn on drip
they
and
have it.
reinvest your dividends, I don't want no part of Robinhood.
Yeah, Robinhood has the drip. They have the dividend
They have it.
reinvestment. Yeah,
Okay.
they have it. Yeah, they
Okay.
have it. Yeah, they have the dividend reinvestment. You just have to put it on. It's somewhere in the settings that
Okay.
you just have to put it
But they
on.
don't provide all this information for us doing research, do they? I don't know, because you had it, right?
Yes, yes,
You
I
had
have it.
Robinhood.
So, yeah, the way they've done it, there are some of the analyst reports that you can really go into it and compare and all that. It's done on a very shallow scale. So you need some of these other ones to go deeper.
Okay.
Yeah.
All right, well, I think that's it for today, Kaiser. Unless anybody
Yeah.
who's watching got any questions, as always, you can follow me on Instagram, Minority Investor. You could come join our private Facebook group, the Minority Investment Group. We always put in information. We welcome people to join and post their information and helpful videos. We always do this for free because we want people to make money. If you got any suggestions for the next videos, go ahead and throw them in there. I think the next video, according to that poll that was in the group, somebody wants me to show them how they can start off with a very little bit amount of money and grow it. So I'm going to show you how to start it from, I don't know, let's say $50 or maybe even $100. Because people think if you don't have a lot of money, you can't get started. But as you know, I took $74 and turned it into like 1,500. It went down. It's like at 1,000 now. $74 for my daughter and turned it to 1,000. And so you don't need much to get started. Just get started. But I'm gonna do that either tomorrow, probably next Sunday. Next Sunday. And well, yeah, what about you? If they want to follow you, how can they
So
follow
for
you?
me, you can just go to Worship and Wealth Relay. It's a new page that's just started. I have to really take it serious. I don't really post a lot there. So
Yeah.
this year I'm going to look into that and make sure I get it really organized. So Worship and Wealth Relay. I'm on Instagram, Worship and Wealth Relay. So you can get me there. I do post a few things there. I go to Terry's page, get some few ideas, and also repost it on the page. It's all about we trying to help to understand that you can do something. You can start from somewhere. We all started from somewhere, right? Yeah. So gradually you get there. Yeah. That's it.
Already. Well, until next time, brother. I know I'll be talking to you plenty of time.
Yeah,
So
yeah, yeah. There's some
we're gonna
catch up
sign
soon.
out, and we'll be back next Sunday.
Sure.
All
Take care,
right.
bro.
All right.